Welcome to The Explainer. We're here to connect the dots on the biggest stories happening right now. A rate cut, a chip war, and a restaurant's logo? What in the world do they all have in common? Well, they all blew up in a wild 48 hours for the economy. So let's dive right in and see how they're all connected, starting with the one decision everyone, and I mean everyone, was waiting for. All right, our story kicks off in Washington, D.C. This is where the Federal Reserve made a huge decision, one that sent ripples across the entire globe. So why was everyone holding their breath? Because this wasn't just some boring meeting. The outcome was going to directly hit everything from the stock market all the way down to the interest rate on your credit card. Think of it like the starting pistol for a whole chain reaction of economic events. And here's the big reveal, a quarter-point cut. That's right, the Fed voted to lower its benchmark rate, bringing it down into a range between 4 and 4.25%. And get this, it's actually the first time they've done this since last December. But here's where it gets really interesting. The decision wasn't unanimous. Nope. The final vote was 11-1. And that one lone dissenter? That was the newly confirmed Governor Stephen Miron. He actually wanted a much bigger, more aggressive half-point cut. This tells you there's a real debate going on inside the Fed about how hard to hit the gas pedal on the economy right now. And listen to this. Fed Chair Jerome Powell himself basically said, there are no risk-free paths now. It's not incredibly obvious what to do. I mean, that really tells you how uncertain things are. He called it a risk management cut, which is basically like taking out an insurance policy. They're trying to juggle slowing job growth on one hand with inflation that's, in his own words, still somewhat elevated on the other. So yeah, the path forward, anything but clear. Okay, but the Fed's big move wasn't happening in a vacuum. Not at all. At the exact same time, another massive economic story was playing out on the world stage. And this one is all about the super high-stakes tech rivalry between the US and China. And the tension here is just ramping up everywhere you look. On the hardware front, you've got reports that China basically ordered its tech giants to stop buying a key NVIDIA AI chip. Then on the software side, you've got officials meeting in Madrid trying to hammer out some kind of framework for a TikTok deal to avoid a ban here in the US. And bubbling just beneath the surface of all this, the same old long-standing issue of intellectual property theft that US lawmakers keep bringing up. And this quote from NVIDIA's CEO, Jensen Huang, really puts you in his shoes. He says, "I'm disappointed with what I see, but they have larger agendas to work out." You can just feel the frustration, right? He knows his company is basically a pawn in a much bigger geopolitical chess match being played by two superpowers. And man, the political temperature is just getting hotter. U.S. House Speaker Mike Johnson didn't mince words. He straight up called China an adversary in response to that NVIDIA chip ban. That's framing this whole economic fight in some really stark, really confrontational terms. So you've got the Fed making moves on one side, and this global political drama on the other. The chessboard is set. Now let's see how individual companies are trying to play the game in this incredibly complex environment. And believe me, the action in the corporate world was coming fast and furious. First up, Amazon. They just rolled out a new AI agent, think of it like an AI superpower, for their 1.3 million third-party sellers. This tool is called Seller Assistant, and it can actually take action for the merchant. We're talking automating all that tedious stuff like ordering inventory and fixing account issues. Pretty cool, right? It frees them up to actually run their business. Meanwhile, in the pharma world, wow, a huge development. Eli Lilly just announced that its new experimental diabetes pill, it's an oral pill, beat out a rival drug from Novo Nordisk in a direct head-to-head trial, and not by a little. It was better at lowering blood sugar, and it helped patients lose way more weight. That is a massive win. And then you have this story, the one that just completely lit up social media, Cracker Barrel. They tried to do a rebrand, right? They ditched their classic old-timer logo for something more modern and simple. Well, the backlash from customers was just intense. People were calling it soulless. It got so bad, the company had to do a complete 180. They brought back the old logo and even paused all their restaurant remodels to, as they put it, refocus on the guest experience. Talk about a PR scramble. And finally, let's jump over to the software world. Shares of Workday absolutely soared after the activist investor Elliott Management revealed it had taken a massive, get this, $2 billion stake in the company. And you better believe Workday responded. They immediately announced a new operating plan and added another $4 billion to their stock buyback program. That's a crystal clear sign of just how much influence that investor now has. Okay, so that's the big picture. We've seen these huge moves from the Fed, the high-stakes global politics, the wild swings from major corporations. But here's the most important question, right? How does all of this big, messy, complicated stuff actually trickle down and hit your wallet? So let's talk about that Fed rate cut. What does it actually mean for your money? I know, a quarter point doesn't sound like a lot, but trust me, it has a direct, very real impact on the money you borrow and the money you save. All right, let's break it down. First up, credit cards. If you've got a variable rate, you'll probably see your APR dip just a little bit, but don't get too excited because the average rates are still hanging out at a crazy high 20%. Okay, what about mortgages? Well, don't expect much to change right away. Everyone kind of saw this cut coming, so it was already priced in. But if the Fed keeps cutting, we could see those rates slowly creep down. And now for the savers out there, this is kind of the bad news. If you've been enjoying those really nice 4% plus returns on high-yield savings accounts and CDs, yeah, those are probably headed south. And hey, while we're talking about your wallet, there's another story developing in Washington. Look at this number, $28.3 billion. That is the staggering amount that elder financial fraud costs families every single year. It's a huge problem. And now, a bipartisan bill is actually gaining some steam. It would give banks more power to hit pause on suspicious transactions to help protect seniors from these awful scams. So when you step back and look at it all, from the Fed's tightrope walk to the US-China tech battle to the big gambles companies are making, it's clear the whole economic landscape is shifting right under our feet. Every single one of these moves creates new challenges, for sure, but also new opportunities. And that leaves all of us with a big question to think about. With the board set and all the pieces in motion, what's your next move?